Good afternoon and welcome to Money Moves to Build Savings and Financial Capability, hosted by the National Credit Union Administration. My name is Ashley Gordon. I am the Financial Literacy and Outreach Program Officer with the NCUA's Office of Consumer Financial Protection. I will be your moderator for this broadcast. April marks two important moments in the consumer finance space: America Saves Week and National Financial Capability Month. This is a moment to focus on financial literacy and ways to build savings for consumers. We are excited to share a great conversation with you today. But before we begin, I'd like to share a few administrative notes. Next slide. First, all attendees will be in listen-only mode. Second, if you have questions, you can submit them at any time using the Q&A located at the bottom right corner of your WebEx console. To submit a question, simply click the Q&A button, type your question into the box provided, and then click Send. Third, if your volume sounds too low, check to make sure your volume is turned all the way up on your computer. If that doesn't work, you may have to plug in external speakers. Fourth, closed captions will be available within the WebEx console. To enable captions, click the CC, closed caption, in the bottom left of your console. Next slide. And I'll just quickly read a short disclaimer. It states, the views and opinions expressed are those of the presenters and do not reflect the official views of, nor should they be considered an endorsement by the Board of Directors, management, or staff of the National Credit Union Administration. Next slide. Now, please allow me to introduce today's speakers. First, we have Crystal Spell. She is the Manager of Military Programs with America Saves. And we also have David Rothstein, who leads the Bank On initiative with the Cities for Financial Empowerment Fund. Welcome to you both. Thank you. Next slide. And now I'd like to welcome Angel McEachin. She is the Director of Consumer Affairs here at the National Credit Union Administration. She's going to provide opening remarks. Angel.
Thank you, Ashley. Each year, during the month of April, the National Credit Union Administration joins other federal agencies and national organizations to take part in National Financial Capability Month and America Saves Week. As financial educators, we have the privilege of guiding individuals from all walks of life on their journey towards financial empowerment. Today, however, people face complex financial decisions with potentially long-lasting consequences at all stages of life. As young people grow into adulthood, for instance, they have to make hard choices about loans for higher education, transportation, and housing, while also managing credit cards and attempting to live within a budget. Older people face decisions about how to manage risk and the cost of aging, as well as drawing down their retirement assets. These decisions have only become more complex with the advent of new financial products, novel ways to make payment, and inflation. For these reasons and others, financial literacy, meaning the skills, knowledge, and tools that equip people to make individual financial decisions, matters, and it's more important than ever. Unfortunately, recent studies reveal a sobering truth. Only 34% of Americans can answer 4 or 5 basic questions on financial literacy correctly. This statistic underscores the pressing need to democratize financial education and ensure that it is accessible to all. As financial educators, we have a crucial role to play in this endeavor by providing practical guidance on budgeting, saving, investing, and debt management. We can equip individuals with the knowledge, skills, and tools they need to thrive financially. Whether it's through workshops, online resources, or community outreach programs, we must meet people where they are and empower them to take charge of their financial well-being. So let us reaffirm our commitment to advancing financial capability and helping people achieve a brighter financial future. Thank you.
Thank you so much, Angel. All right, as we begin today's discussion, I thought it would be helpful to provide everyone with a shared definition of what financial capability is. Financial capability is the capacity based on knowledge, skills, and access to manage financial resources effectively. In simpler terms, financial capability involves knowing how and also having the skills to manage your finances. But it also requires having access or entry into inclusive financial systems, pardon me. Next slide. We look at financial capability through kind of three lenses or three prongs. When we talk about knowledge, in the case of today's conversation, we're really talking about financial literacy, being able to learn and gain knowledge about how to manage your finances. But having knowledge isn't enough. You also have to have skills. So one of the other lenses is making sure that people have actual tactical skills to be able to put to use and build good habits. And so one of those skills, and the one that we'll be talking about today, is savings. And then the last essential is access. Having affordable access and inclusive access to financial products and services. And today we'll be talking about affordable access to credit union accounts. Next slide. Now we know that there are many barriers to access when it comes to financial products and services that have historically made it very challenging for American consumers to participate in the financial marketplace. Some of those are income inequality, land distribution, redlining and other racist lending practices, language barriers, limited or no access to financial products and services, restrictions to education, and simply a lack of financial education. Next slide. With such a long history of economic exclusion in the United States, many communities still struggle with building financial capability and wealth accumulation. Data shows that 37% of Americans have said that they would not have the money to pay for an unexpected expense unless they were able to borrow or sell something, or they wouldn't be able to cover that expense at all. In a 2021 McKinsey report, it was estimated that the disparity of wealth between Black and white households in the US was over $330 billion. In 2019, the average per capita wealth of white Americans was over $330,000, but only about $60,000 for African Americans. The median household income for Native Americans is right over $43,000 compared to $68,000 for white households in the US. The average Native American household has 8 cents of wealth for every dollar of wealth for the average white American household. And in 1863, Black Americans owned 1/2 of the national wealth. Today, so over 150 years after the Emancipation Proclamation and the official end of slavery in the United States, that number is just over 1.5% for roughly the same population of people. Next slide. While solving these deep issues of historical financial inequity is challenging, financial literacy plays a central role in helping individuals and communities to become more capable with knowledge and skills. Research shows that people who have access to high quality financial education have better financial outcomes that result in less debt and a higher quality of life. When people are more financially literate, they are able to become more financially capable. Next slide. Unfortunately, financial literacy programming has largely been absent in U.S. K-12 curriculum until recent years. And for many adults, they have not had formal opportunities to acquire financial skills. In 2019, it was found that 34% of respondents were able to answer 4 or more questions correctly in a 5-question survey on fundamental concepts of economics and personal finance. The CFPB did a financial well-being study and found that US adults average scores of only 54 out of 100 on their financial well-being scale. And it's also been found that 15-year-olds in the United States found that, or the survey found that 18% of 15-year-old respondents didn't learn fundamental financial skills that were often applied to financial situations. So things like being able to create a simple budget, do comparison shopping, or understanding an invoice. They did not have the knowledge or the skills to be able to do that. And this is really where the important work of today's speakers intersects. When we talk about financial capability and savings. So I'd actually now like to open the floor to Crystal Spell. I want to welcome her to share with us more about what she and her team at America Saves are doing to be able to help Americans with their savings. Crystal, welcome.
Thank you so much, Ashley, and thank you for having me. Again, my name is Crystal Spell, and I'm a programs manager at America Saves. And so today I'm excited to share just a bit with you about enhancing member financial wellness and how America Saves Week can amplify awareness and impact toward your mission of strengthening communities, expanding your support of financial education, as well as ensuring equitable financial inclusion. Next slide. So let me just begin with a quick overview of America Saves so that you can understand, our mission and focus. So America Saves is a national campaign with the Consumer Federation of America that focuses on building the financial confidence of everyday Americans. So this is through sharing strategies, resources, and tools that promote successful saving, reducing debt, and getting on that path to building wealth. Our 4 programs, America Saves, Veteran Saves, America Saves at Work, and the Young Savers program, primarily support and impact low to moderate income earners, people of color, women, veterans, and youth ages 14 to 24. Those are college students usually, and employers. And so we focus on building financial confidence by increasing financial understanding, identifying their savings goals, and you'll hear me talk a lot about that during my time, creating content, resources, tools, educational forums that help them implement and stay on track with their financial plans while leveraging support and community resources. And so our approach acknowledges each individual's unique financial journey. We offer educational forums like workshops and annual events like America Saves Week, which I'll talk about in a few minutes, and Veteran Saves Week to foster that financial confidence. And in addition to our savers, as we like to call them, and in your case, credit union members, America Saves is a resource and collaborative partner to thousands of organizations. So this looks like financial institutions, nonprofits, colleges, government agencies. And so those collaborative partners extend our impact by sharing our resources within their communities. Next slide. So I want to start by painting a brief picture of the current savings landscape that many Americans are navigating today. And so with roughly 2 in 3 Americans unable to cover a $500 emergency, and a concerning number doubting that they may not be able to retire the way they want to due to financial insecurities, there are some major challenges. In fact, a Grow Therapy 2022 study reported that 57% of US adults said that they're worried about their finances, and more than 80% are stressed about the higher cost of living. And so one of the biggest barriers to also overcoming these challenges is a message that we tend to often hear in the personal finance industry. And it's changing, but it's that one needs to have 3 to 6 months or 6 to 12 months of expenses saved in their accounts. And this standard, while ideal, and I know a lot of people would love to have that, is not necessarily feasible and can be a bit overwhelming for many. And it can create a disconnect between industry advice and the reality of people's financial situations. And so the feeling among many savers or individuals is that saving can be unattainable, and that leads to discouragement and inaction rather than fostering what we like to call that culture of saving. And so while there is truth to you possibly being more vulnerable if you don't have that saved up, the idea of saving that much money for someone possibly not making what they consider a living wage can feel impossible. So we believe at America Saves that the way to make this message more relatable and achievable is the idea of starting small and thinking big. And while the end goal might be to save up a few months of living expenses, the message should be centered on around how to get started on that path, which is an achievable goal. And so, in response to this, America Saves and our partners are stepping in to empower low to moderate income families and the most vulnerable. And our focus isn't just on saving for the sake of saving, but we are working to align savings actions with personal values and goals, emphasizing that importance of building a financial buffer against unexpected expenses and ensuring, financial stability. And so nearly a quarter of those who take the America Saves pledge, which you'll learn a little bit more about later, prioritize emergency savings, acknowledging that even a modest emergency fund can significantly improve financial footing. Next slide. So let's talk a little bit about those individual actions you can do as a saver, and the importance of saving and kind of jump starting that process. How do we begin, especially in a landscape that may seem overwhelming, and how do we effectively start that process? And so I mentioned a little bit about this a few minutes ago, but central to our approach is personal values led saving. And so this is where your financial actions align with what truly matters to you. So that can look like securing your family's future, however that looks, owning a home, preparing for retirement. And so this step ensures your financial goals are meaningful reflections of what you prioritize in your life. And so to address this, we promote a flexible approach with 7 steps to jumpstart your savings. And once you've identified what's most important to you, the next step would be 1, to set that goal. So you're defining what you're saving for. Again, this could be an emergency fund, education, a vacation. We believe in planning for fun things. It doesn't have to always be, the worst. But your goal should resonate with your personal values. And then we have making a plan. So this looks like getting that clear view of your finances, which includes knowing your income, your expenses, savings goals, financial values, assessing your financial landscape to determine what changes you need to make with your spending and saving. And our most utilized resource for making a plan is establishing your spending and savings plan workshop that walks savers through each step of getting that clear view of their finances. And then we have the idea of starting small and thinking big. So this is, rather than focusing on that 3 to 6 months or that 6 to 12 months of expenses saved up, we encourage savers to start with a milestone of saving their first $500 and then building from there. And once they reach that milestone, with success, then they feel great about that accomplishment and they can move to the next milestone. And it's also at this point where we acknowledge that saving is a cycle, right? And so should an emergency arise where you have to deplete your savings, it's okay. That's something to celebrate, and you just simply reset, because we always tell them, remember, this is what you've been saving for. That is the point of it. And then we have saving automatically. So we encourage savers to use split deposit or auto transfers at their financial institution to make saving automatic and efficient. And the great thing about this is that you can always adjust your amounts and do what's best for your budget and your family at the time. And then we have find creative ways to save. So you're looking for those opportunities to reduce expenses or increase income, redirect any extra funds to your savings if possible. And we make it a point to be creative, as there are some individuals who may not have the time, the physical ability, or mental capacity to add additional income. But there are many creative ways to increase income or possibly receive a cash injection. So thinking like a saver can come in various forms, right? And then we have keeping track of your spending. So being aware of where your money goes, it helps you identify more opportunities to save. We encourage savers to have intentional financial self-care check-ins depending on where they are in their journey. So that can be weekly, bi-weekly, or monthly. So they can make adjustments in real time and just be cognizant of their habits however that looks. And so this helps them get an understanding of how finances affect their emotions and mental health as well. And then celebrating success, acknowledging those milestones. We always say that saving is a marathon, it's not a sprint. We say that saving is a journey, not a destination. So it's about recognizing your progress and behavior changes you're making as much as you're seeing your savings account increase. And also recognizing that credit unions are your partner in the process. So offering tools and resources and support you needed to be successful on your financial journey. Next slide, please. So as we shift from those individual savings actions, this is where we spotlight America Saves Week. So this is our annual event that is a perfect example of the power of collective action. And so America Saves Week serves as a rallying point for thousands of organizations, credit unions, individuals, to emphasize the importance of financial check-ins and proactive planning. And the week is filled with, motivating messaging, resource sharing, and events designed to encourage the communities that we serve to pause and do a financial check-in and build positive savings habits. And credit unions can leverage the America Saves Week toolkit to effectively engage with their members and community, aligning with the week's themes. Our week has one central theme, which is saving for what matters most. And then every day has a daily theme. So you can align with the week's themes to promote savings and financial wellness. And that toolkit is designed to help you amplify the key messages during that week. And so those messages or daily messages look like saving automatically, the importance of it, preparing for unexpected expenses, saving for major milestones, understanding that paying down debt is also saving, and the importance of saving at any age. And so those toolkits, they include ready to use social media content, posts, images, infographics, and they are to help engage your audience online. And then you'll also find tools like podcasts and flyers that cover essential financial topics. And so the tools are designed to be straightforward and practical and effective. And then furthermore, participating credit unions can measure the impact of their efforts through simple polls that you do or tracking engagement in savings related activities such as opening savings accounts or setting up auto transfers. And so it really, the toolkit helps you to create a successful America Saves Week. Next slide. So let's talk a little bit about the impact of the week last year. So here's what happened in just 1 week. So during America Saves Week 2023, we joined forces with over 3,900 organizations and reached 9 million people. Over $788 million was saved by participants in both new and existing accounts. Over $397,000 in new savings accounts were opened, many set up to save automatically. And thousands reported they started saving for the first time, increased their savings, or begin saving automatically. And so the America Saves Pledge in 2023 helped pinpoint what people are saving for. And you'll see that 25.64% saved for general savings, 25.4% went for emergency funds, and 15.73% for vacations or special events. And so the goals haven't shifted much from 2022 that showed us the consistent financial focus amid economic changes. So what these numbers show to us, at least, are that when people are given the right tools and support, they take action. And what's really great about the week is that we are spreading a message, but we aren't just spreading a message, but we see real money moving and saving in real time, and we see people committing to save. Next slide. So why should credit unions and members embrace America Saves Week? Well, for credit unions, America Saves Week is one way to partner together as an industry. It's an opportunity to take action on the many ongoing conversations we have as an industry and address the challenges of the everyday people we serve in our respective communities, right? And the week is also an opportunity for you to bolster member engagement and financial health. So you can use the week to deepen your connection with members through personalized advice, practical tools, highlighting valuable services that you offer. And it's really a chance to stand out as community partners that are committed to improving financial literacy, education, and wellness. Um, and so you can also use America Saves Week as an opportunity to support your employees' financial wellness. So this can also serve as a platform for educating your staff about the importance of saving, providing them with resources to manage their finances, and then encouraging them, to set and achieve financial goals. You can highlight, relevant employee benefits that support financial wellness, such as matching retirement contributions, financial counseling services, whatever it is that you offer. And for credit union members and savers, this means you end the week, America Saves Week, with clarity around your actual take home income, your expenses, knowing your short, your mid, and long term savings goals, being conscious of your financial patterns and behaviors, and assessing your financial landscape by deciding what changes you'd like to make, as well as knowing where you can turn to the community for support that could help you fill in any gaps for basic needs. So it's a time to focus on saving that can lead to improvements that reduce stress. Next slide. And while we're at the tail end of America Saves Week 2024, it's not too late to receive access to the toolkit and resources that can be used year round. And then, of course, once you sign up for that, you'll be in the loop when America Saves Week opens later this year for 2025. Also in November, we host the Veteran Saves Week. It'll be our inaugural Veteran Saves Week. So if you serve and support a number of veterans or transitioning service members, we encourage you to join us for that as well. Next slide. And lastly, because credit unions and America Saves have a strong values alignment around financial well-being for all, becoming and joining us means gaining access to those resources, those tools, and support for both your institution, your members, and community year-round. So for example, the America Saves, Veteran Saves, and Young Savers Pledge that I mentioned earlier on serve as an entry point for savers to get ongoing communication and support around their savings goals. And so credit unions can offer the pledge directly on their website by request as an additional support mechanism for their members. And by taking the pledge, individuals commit to setting a specific savings goal and creating a simple plan to achieve it using that online pledge tool. And so the pledge serves as a bit of a jump start or starting place for slavers once again to get that clear view on what they want to save for and a plan to make it happen. And of course, we're committed to privacy and protecting data, so you don't receive, we don't receive any banking information, home addresses, or anything like that. But by taking the pledge, your members are extending their community and support with their financial goals. And so additionally, with an embeddable pledge, you'll have access to, additional data and insights about your members that could be helpful to your own products, programming, and services. And so, to gain, direct communications with America Saves or get resources or tools or stay up to date on events, educational forums, and of course, America Saves Week, I encourage you to visit any of the websites that align with your community you support or needs as a saver. And thank you so much for giving me the opportunity to share with you today.
Thank you so much, Crystal.
Thank you.
We will now open the floor and welcome David.
Thank you so much. Really appreciate it, Ashley and Angel, for organizing this. And Crystal, I am a former volunteer as well as coordinator for the Cleveland Saves work, which was one of the first, if not the first, local Saves coordinated campaign from many years ago. So it's great to hear the updates and how this has continued to move.
Oh, great. Thank you.
Yeah. So, as was mentioned, I'm a senior principal with the Cities for Financial Empowerment Fund, also known as the CFE Fund. We are the leader of the National Bank On program, which is all about accessibility, about bringing people into safe and affordable checking accounts, as well as providing research and partnerships to help credit unions, banks, others participate in these efforts. So I'm excited to talk with you all today about that. Go to the next slide. So I wanted to do it kind of a Mythbuster style approach to today, because I know that Bank On has been around for a long time, and I think there are a good deal of myths about what it is and what it isn't. So the first myth that's out there is that Bank On is about public policy only, and it's a national policy initiative. You can hit the next one. The reality is that Bank On is a tangible nationwide work set, and the work that we do is not just public policy, but it's very program related. We support either by funding or providing resources to more than 100 local coalitions around the country. That's what those white dots represent. Some are at the state level, for instance, like in Colorado and Pennsylvania and Florida. And others, we have local coalitions that are more city or county based, such as some of those other ones that are on the map. We also have very strong partnerships with financial institutions around the country. There are more than 425 financial institutions offering at least one Bank On certified checking account for people to get into and to use. So we have continued to expand. This map and these numbers looked quite different 8 years ago, 10 years ago when we took over this work set. So we're very proud and excited about the opportunities of not just doing sort of work nationally, but supporting this work in local communities. You can go to the next slide. Another myth is that Bank On is only for big banks. The reality is that without a huge pressed effort, we have about 18% of all certified accounts are credit unions offering these accounts as well. So it's not just large financial institutions that participate in Bank On. The term, Bank On is about the verb of banking and actually, making purchases and withdrawals and deposits, as opposed to the actual financial institution part of it. We have financial institutions that are mission-based. We have CDFIs. We have one branch credit unions and banks. We have multinational large banks and credit unions that participate. It really is a very wide spectrum of participation, which is exciting. Those green areas on the map represent the point of view of share of households that are within 2 miles of a branch offering at least one Bank On certified account. So we've got some work to do in the middle of the country, as is very common in financial health work. But the map continues to grow, and we have about 96% of all zip codes that are within a couple of miles of at least one Bank On certified account for individuals. You can go to the next slide. Another myth that's out there is that being unbanked is just an adjective, that it's sort of a state of being, and it'll either go away for most people, or it doesn't really have everyday important implications. The truth is that mainstream banking access is critical to all things related to people's finances and their financial health. There are two very big main reasons why this matters. The first is, as you can imagine, it's really expensive to be unbanked. People can spend anywhere between 10 and 20% of their take-home income on alternative financial services. So it's really costly for your clients or for individuals on this call. It's costly to buy money orders or to pay to cash a check. Those are pieces that add up, and they add up quickly. Another big reason why having a bank account matters is that it's the building block for all things related to financial health. So if you want to establish credit or have better credit, if you want to save, like Crystal spent the last 20 minutes talking about, if you want to be able to save for emergencies or save for a purchase, having a bank account is the vehicle that allows that to happen. On the other side of the house of the CFE fund, we run a national program where we help cities institute one-on-one free public counseling as a city service through our Financial Empowerment Center model. And we did some research work a few years back. And what we found is that unbanked financial counseling clients were half as likely to increase savings and over a third less likely to establish a new credit score. So, and this didn't even look at the quality of those bank accounts. This was just simply having a bank account. We also know that unbanked clients who became banked during counseling were almost 8 times more likely to increase their savings. So it's the direct vehicle for making these things happen. You can go to the next slide. One other piece of this is that bank-on certification, the process in which we work to help financial institutions create these accounts and publicize them, that it's really only about overdraft fees and overdraft. And that's because overdraft gets a lot of media coverage, and rightfully so. It can be very expensive, and at times it can be predatory. However, the bank-on standards are really about addressing a ton of different pain points in people's banking experience, and it's about access. So the actionable items on bank-on, it is true that bank-on accounts do not allow for overdraft or insufficient fund fees. But there's a lot of other pieces to it. And they all address every 2 years, the FDIC comes out with a study that looks at the reasons that people are unbanked or underbanked. And so each of the pieces of the standards is rooted in the areas where people have said that these are problems and reasons people don't have accounts. Affordability is the consistent main reason why people have said they don't have an account, which is one of the reasons that it's a big focus of ours in the national account standards. We do allow a monthly maintenance fee, but it has to be $5 or less. And it has to be all inclusive. So it can't be, a $5 base fee, and then every time you do X, you get charged Y. It has to be all inclusive. We also require that the account has a low minimum opening deposit. We know that it's hard for people to start an account, and oftentimes it's literally with the cash that they have on them. So it does require that the deposit can be $25 or less to start the account. Additionally, the accounts are fully functional. One of the things that was really important to us when we created the national account standards is that people would be able to use these accounts for all of their different needs. So these accounts have to allow you to pay bills, make deposits and withdrawals, transfer money, not be penalized for going into a branch or to an ATM or for using the phone or being online. These are not the accounts many of you at credit unions and otherwise probably remember the early days of the second chance bank accounts, which were basically high cost savings accounts. That's not what these are. These are fully functional accounts. And the difference is that they have some safeguards on them that apply both to the financial institution and to the customer. We like to say that it's safe. It's a safe account for those that are offering it, and it's a safe account for those receiving it. You can go to the next slide. One of the other myths is that getting this bank-on certification is complicated and it's expensive. First of all, there's no fee or cost to become a certified bank-on account. Secondly, we are really excited about the partnerships that we have with the core service providers who work with financial institutions to basically run the models for their accounts. They have templates now that they can work with you to use and create, allowing you to basically do a plug and play. I just met with a credit union in California that said that she, in the matter of 10 minutes, sat down with their representative at their core, which is FIS, and quickly was able to design this account and get it literally running the next day. So it was very hassle-free for them. And that's the experience that we like to hear. That's what we think is important. We also know that some of our core processors have different models that allow you to bring more access into this account. So for instance, FIS Check Systems offers what's called the Bank On Bundle, which is a right-sized risk approach to approving people to open the account. It's a different strategy, as they call it, for approval, meaning that just because somebody may owe some money from a previous bank account that they have, they're not outright denied the account opening ability for a bank on account. And that's because the bank on accounts are not the same level of risk as a typical checking account. You can't really go negative in a bank on account. So what we like to see is not only is it easy to design the product, but it's easy to manage access to the product and work with it and pull statistics on the product, which we think is really important. You can go to the next slide. Another myth is that bank on certified accounts cannibalize existing customers. We hear this a lot, and it's a real worry. We get it. So this means that, what we're not seeing is that people who have a current account with you switch over to the bank on account. Based on the Bank On National Data Hub, which is run and organized by the Federal Reserve Bank of St. Louis, we found that 85% of accounts that were opened were completely new customers to the financial institution. That means that these accounts are attractive to people that are out in the community, and they're coming to your credit union to specifically open this account and to start that banking relationship. We know that these accounts are extremely popular. Over 17 million accounts opened to date, with over 4 million just in 2022 alone. And there's an attraction to these accounts for community financial institutions in particular that can offer these accounts. Again, this is not just a big bank or big credit union program. One of the first questions that gets asked at a coalition meeting is, how do we get our credit unions involved? How do we refer people to credit unions in our community so that they can participate in this program and in this account? You go to the next slide. One of the other questions we get, or the myths is out there, is around the fact that many credit unions are mission-based, or they're CDFIs, or they have a very strong financial inclusion platform. We absolutely get that. And so we're not saying that you're not already offering good accounts. The certification is a process and a seal that is not just about saying we have a good account. It's about the connections, both locally and nationally, that it makes. We have put a ton of time and energy into banking relationships, what we call program integrations. I think it's great if somebody comes into the credit union and either becomes a new member and opens an account, or if they're already a member and they open a new account. I think it's great if that happens one by one. It doesn't always happen that way. And quite honestly, what our vision would be that there's a more streamlined process for that. And by that, I mean, we want people by the dozens opening these accounts at your financial institution, not just one by one. So our program integrations, we have a few that we've highlighted. The first is during the early days of the pandemic, we partnered with the IRS, the FDIC, and the CDC to get certified bank on accounts visible on the IRS website and the FDIC website, so that people could open an account to receive their stimulus payment or their child tax credit. We also work to ensure that people could enter in that information to receive those payments. More than 10 million households entered in new or changed information to receive their benefit payments during that time period. Not all of those were obviously bank on accounts, but it brought to the forefront the issue of being able to get that direct deposit. Additionally, one of our longest run programs that we're excited about is the Summer Jobs Connect program. And that's that picture of seal that you see from Washington, D.C. We partner with city governments around the country who employ young people for the summer. Oftentimes these people, this is their first opportunity to get a paycheck steadily and become banked. So during the process of enrollment and training for young people that are going to be lifeguards or camp counselors or lawn maintenance, whatever it may be, during that training process, they learn about banking and they open a safe and affordable bank account to get to get their first paychecks in. So the minute they start that summer employment, they're getting money into their account. That Summer Jobs Connect program has brought thousands and thousands into the banking mainstream. And as you guys all well know, many times people's first bank account is one that they stick with for a very long time, and it sort of sets the tempo of their expectations of what holding and having a bank account would be. You can go to the next slide. Another point or piece that we hear a lot about is that there's a nervousness that bank-on accounts are rarely used and that they're low balance accounts, and that people are just going to take the direct deposit, pull all of their money out into cash and not use them. That's definitely not what we're seeing from the Bank-On Data Hub when we pull data. 36% of households that have a bank-on account use direct deposit, which actually we didn't at first really know how to interpret that. But what that's also telling us is that people are also depositing cash and checks into the account. So that is a very good thing. That's what we want to see them doing. 37% use P2P payments. So they're using Zelle and Venmo and other methods to move money associated with their account and also receive money. More than 3/4 are making debit transactions. So you're also making revenue on interchange fees from the swipes. So as a financial institution, it benefits you, obviously. It's that people are using this card to make purchases. It's also a convenience factor. So people are valuing the fact that they can swipe a card as opposed to dealing with all cash. And then again, people are by and large digitally active using this account. So they're not 100% branch dependent, which is also important to note. You can go to the next slide. Another myth is that the unbanked aren't reachable, and that this is a very tough sledding and lost cause. Based on some research that we contracted from a national group in 5 cities around the country, we found that when the right messages are used, unbanked households said that they're interested and very intent on opening a bank-on account. There was a 14% increase overall after exposure to specific bank-on messaging for people to move from "I don't have a bank account and I don't want one" to "this message is motivating and believable and I'd like to open an account as soon as possible." What we found is that the transparency piece of what this account is and the motivation around being able to save for the future and being able to use this account on a day-to-day basis were all pieces of the marketing messages that were really helpful. So one of the things that we offer our financial institution partners are these, this level of research, but also help in marketing the accounts. So we're not just sending you out there saying, go do this, design this account, and we wish you the best of luck. We are a partner in working with you to bring people into the banking environment. So that is what I wanted to say today, and kind of talk about why these accounts matter, why they're how and why they're helping people with access and affordability, and how people are using these accounts. As I mentioned, applying for bank-on certification is quick and easy. We'd love to work with you. If you have any questions, you should feel free to email me. That link, the joinbankon.org certify link, you can do 2 things there. You can request more information, or you can literally submit an account for certification, and that'll come directly to us, and we'll work with you to get certified. So again, thank you so much to the NCUA for hosting, for all of the different stakeholders and credit unions who joined today. We very much appreciate your efforts in the community, and we look forward to partnering further.
Thank you so much, David. We are coming close to our time. I don't think that we're going to have enough time to get through a Q&A discussion today, but I will, if people have questions, I will give some contact information in our readout so that you can send questions to us at NCUA or as well to David and Crystal. So we're going to go to the next slide. Thank you. Alrighty, so I want to share a few of the NCUA's resources that I think will be very helpful and important for our attendees today. First, I want to highlight the NCUA's Money Basics Guides. These guides are a series of learning tools developed specifically to assist financial educators, credit unions, and other financial institutions in their efforts to promote financial literacy in the communities they serve. These guides are also for everyday people, for consumers who want to build their financial knowledge with practical skills that they can use to be able to manage their money. We currently offer guides on checking and savings accounts, as well as saving and budgeting. But later this spring, in just a few weeks, we'll be releasing a new guide on building and maintaining credit. So when that guide is released, we'll make sure to send a notification out to our lists. Next slide. In addition to our guides, we offer a great booklet on being able to teach credit unions, but also other educators on how to build a financial literacy program. So if you are a credit union and you're trying to figure out exactly where to start and get some ideas for how to build a programming like this into your offerings, check out that guide. It is on our website, and actually I'll go to our next slide. The NCUA offers a consumer-facing website that is called mycreditunion.gov. There you will find that booklet. You'll also find those Money Basics guides, as well as many other financial education resources. We'll go to the next slide on savings, lending, debt. If you're looking for information about home buying and auto loans, retirement, etc., you can find educational content for the consumers that you serve, or if you are an individual who's just trying to further their understanding and education and get questions answered, we have that content on mycreditunion.gov that is there for you and tailored to your needs. Next slide. And that website is available in Spanish. So anything that you're able to find on mycreditunion.gov in English, you'll be able to find it in Spanish as well. So we encourage credit unions to share that content as well. Because again, as we talk about eliminating barriers to access, making sure that we have content that's available in Spanish and eventually in other languages as well is a priority, and it's important. Next slide. Alrighty, so as we close today's webinar, I will share that this broadcast will be available on NCUA's YouTube channel and on mycreditunion.gov in the coming days. We always try to share the resources that have been discussed on these webinars with the attendees, so we'll make sure to do that in the next week. We'll be sending out an email that's just a readout that'll give you the link to the video as well as the resources that David, Crystal, and myself have shared so that you all have that and can be able to share it with your networks as well. And if you'd like to get in touch with us, please send an email our way at consumereducation@ncua.gov. We'd love to hear from you. We thank you very much. We want to thank our speakers, David and Crystal. We thank you for participating and giving your time today. And we want to thank all of our attendees for joining us. We hope that this was a valuable and fruitful conversation, and we hope that everyone has a great Thursday. Enjoy your day. Goodbye.